Bitcoin hit $126,000 in October 2025. It's around $63,000 today. That's crypto for you, sharing as of June 20th, 2026. So Bitcoin is down nearly 50% from its all-time high, and everyone's pointing fingers. Was it the whales? The ETF outflows? Michael Saylor? Sure, all of the above. But there's one entity that's been quietly strangling every risk asset on the planet for the past year, and they meet in a boring conference room in Washington, D.C. Ladies and gentlemen, the Federal Reserve. The Federal Reserve controls interest rates in the U.S. Think of interest rates as the price of money. When rates are low, money is cheap. Investors get bored of their 0.5% savings account and start YOLOing into Bitcoin, tech stocks, and whatever speculative asset is trending. When rates are high, money is expensive. Suddenly, that boring government bond paying 4 to 5% looks pretty attractive. Why take on risk when safety pays? Bitcoin is what Wall Street calls a risk-on asset, a polite way of saying people buy this when they feel like chasing yield in volatile markets. So when the Fed keeps rates high, Bitcoin suffers. Simple, except nothing about the Fed is simple. Here's the timeline. September 2025. The Fed starts cutting rates. 3 cuts. Crypto bulls go wild. Bitcoin rockets to $126,000. December 2025. Cuts stop. Rates sit at 3.50 to 3.75%. 2026. 0 cuts. The entire year. Nothing. Crickets. Meanwhile, inflation is still above the Fed's 2% target. Energy prices spiked. The U.S.-Iran conflict didn't help. And the Fed's new inflation forecast revised up to 2.7%. So the market is stuck in this purgatory where rates are high enough to make crypto look unattractive, but not so catastrophically high that it's a full crisis. Just vibes of slow suffocation. And then, June 17th, 2026, the Fed meets again. Here's where it gets spicy. Jerome Powell, the guy crypto traders spent years yelling at, is gone. Stepped down in May. Enter Kevin Warsh, the Fed's 17th chair. And June 17th was his first ever FOMC meeting. Markets weren't even that worried about the rate decision itself. Futures showed a 97% chance of no change. Everyone knew rates were staying put. What they were watching, the dot plot and Warsh's mouth. The dot plot is basically the Fed's internal scorecard. Each policymaker pins where they think rates should be at year-end. In March, the median dot suggested 1 rate cut in 2026. If Warsh's first dot plot removes that cut, that's the signal. Higher for longer. No relief. Bitcoin stays in the basement while capital sits safely in a 4% savings account. Then Warsh walked up to the mic and said, "Persistently high prices are a burden to the American people." Bitcoin dipped 1% and Coinbase slid 2%. You might be thinking, it's just 1%, relax. Here's the thing, Bitcoin doesn't just react to what the Fed does, it reacts to what the Fed signals. The entire crypto bull thesis for 2026 was, rate cuts equals cheap money equals number go up. Every time that thesis gets pushed further into the future, the buyers who were waiting on the sidelines stay on the sidelines. ETF inflows dry up. Leverage gets flushed. Price consolidates. Right now, the Crypto Fear and Greed Index sits at 22, deep in fear territory. On-chain data is flashing a bottom signal that's historically preceded recoveries. But those recoveries took months, not days. And with 80% of prediction market traders betting Bitcoin falls below $60,000 at some point this year, the crowd isn't exactly bullish. So here's where we are. Bitcoin remains structurally strong, bolstered by robust ETF infrastructure, growing institutional adoption, and landmarks like Fannie Mae accepting it as mortgage collateral. Yet it is still a speculative play, tactically exposed to a Fed that refuses to blink. The long-term thesis? Intact. The short-term vibe? Painful. And if you were hoping Kevin Warsh would ride in and save crypto? He spent his first press conference talking about inflation task forces. Bitcoin doesn't need a dovish Fed to survive, but it definitely needs the Fed to stop being so aggressively not dovish. And do remember, Bitcoin is still a speculative play. Until then, enjoy your 4% savings account. The Fed certainly is. Hit that subscribe button to stay informed. See you in the next video.